Hey, it's Erik Praskins, your host of the Erik Sells Real Estate Show, and I wanted to welcome you back to this next episode where I'm going to be talking about credit, debt, and credit scores to buy a house. I had such a good weekend. On Saturday, we went to a birthday party. I took my boys and we went bowling. They had so much fun spinning around, and I mean, even Dylan had a blast. And so it was such a great time to spend with them on Saturday. And then we had a big group of our friends come over Saturday evening to our home, and where we played it was basically guys versus girls. And we had like seriously 20 people there. And hey, if you ever want to have a game night, let me know. Love to have you over. So when I meet with families, the conversation usually starts with what they're looking for in a house. And then it usually goes to what it takes to qualify for a home loan. Then the conversation usually goes to their history and credit score. One of the main reasons why people can't qualify for a home loan is because of their credit scores. Most people don't know what a credit score is, how banks determine a credit score, and really what they need to do. When I grew up, and when you grow up, we went to school, no one teaches us how to budget or how to manage your credit score. What's a good credit score? What's good, what's bad? And then we graduate from high school, and then we get inundated with all these credit card companies mailing you and emailing you, signing up for a credit card. Many of us think that getting a credit card is the rite of passage to becoming an adult. And then we find out quickly that to buy a car or to buy a house, we need a credit score. A credit score is basically our financial behaviors to credit that's been extended to us. For example, let's say that I qualify for a credit card and they give me $1,000 to spend. And then based on my behaviors with that $1,000, I'll have a credit score. How I manage that credit will determine if I have a good credit score or a bad credit score. Am I making payments on time? Am I maxing out my credit cards? Am I maxing them out and then only making the minimum payments? Let's say that you decide you need 10 new outfits at Nordstrom's and you max out that $1,000 credit card. You get into debt, and then you decide to get another credit card because you need more spending money, because there's no more room on your other credit cards. Many people get into this debt cycle and it's difficult to get out. Because you're in debt and your behaviors have not been good, you will have a lower credit score. Not all people make poor credit choices though. Sometimes life just happens. Sometimes there's a loss of a job or an unexpected illness. I've been there. My son was in the hospital for 8 months and I had many thousands of dollars in medical bills. I lost my house to foreclosure. I know what it's like. I'm not ashamed of what happened. I decided to just dive in, continue to work hard, put a plan in place so I can improve my credit and then get back to home ownership. You need a 620 credit score to be eligible for financing, and you need a 640 minimum credit score if you want to participate in any of the amazing down payment assistance programs and grant programs. Now is the time to prepare and get serious about your financial behaviors. It's time to become intentional. Start thinking about where your money is going. Start saving, start paying off your debt. I can help you too if you let me and my team of specialists. With any questions, contact me. There is no dumb question. Subscribe to my channel, message me on Facebook, give me a call at 602-571-7162. I'm happy to help. And let's make your dream of home ownership a reality.